Samara, welcome to the show.
Thank you for having me again. I guess it's a different
We are
podcast
back.
now. But
Yes, if anyone's interested in the first time, it was Jessica O'Brien's podcast. Now we're on the Vitalize podcast, but we haven't talked. It's been like more than a year and a half. A lot has happened in the world of Chingona Ventures, in your world. Let's start there. You raised a $52 million fund, which is amazing. Quite the step up from the $6 million fund one. How did that come about? Was that your target? Like, did you know you wanted to go a much bigger fund? Like, I'm just curious about all that. Let's just start with that.
I mean, look, when I think about getting into venture 7, 8 years ago now, and if you would have asked me when I was going to raise my fund or told me that I was going to raise my own fund, I would have been like, you're nuts, right? I was just excited to just sit at the desk and talk to founders. And so it's just been a ride with raising my first fund, which was $6 million, and then fund two, the target was actually 25 million. So I, unlike a lot of people out there, like in the market, I think undershot myself in that I didn't think I could even raise 25 million, right? I mean, like Sol GP, Latina in the Midwest, it's hard. It's hard for anybody. And there are people that having zero venture experience, raise huge funds. But, for me, I went off with that initial target of 25 million, and I basically hit the majority of that in my first close within 3 months. And I was very fortunate for that. Had a lot of great momentum in the market, as well as interest in what we were building. And I wasn't new to VC, right? I had been a part of Math Venture Partners 2 years for 2 funds prior to starting my own fund. Then I had a track record with my own fund. But I was very, very fortunate for all the interest from LPs. And we also decided to double our fund size because the market was just changing in a very different way that we hadn't anticipated. So what we modeled out was, $4 million valuation caps at pre-seed, which were no longer relevant, right? I got 3 to 5 million when I first started my fund. And so they were going from 10 to 20 cap. And so for us to really be competitive, lead, which is what we focus on doing about a third of our deals, we needed to raise a bigger fund. And we were just in a very fortunate position where we had a lot of really great LPs that were interested. So we did our final close in May, and so we had a fresh pool of capital, which is good in this environment. We can talk through that a little bit, but there's a lot of opportunities in this market. So we are doubling down, and we're also expanding our team. So very, very excited for this fresh pool of capital.
Very helpful in many ways, obviously. I want to get into the team part eventually, but one thing I was curious about, because I think you had mentioned in one of the news things I'd seen about the raise with this bigger fund and what you wanted to do. You said that you saw way more founders who needed lead checks at the early stages. They needed bigger checks. They needed lead checks to get the job done, essentially for their raise. And why not Chingona be that fund to do it? And doubling that fund size, just take me through how you kind of think about this fund, the portfolio construction with this check size differences from fund one. I'd love to hear more about like the logistics behind the fund.
Yeah, so fund one, we had 27 investments in the fund, 6 million. Check size was 100 to 250,000. And so what we proved in there is not only did founders want to take our checks, but we were able to lead some of those deals and preempt the rounds and join the boards. And like founders, a lot of the founders that we back, so we don't only back women and minorities, but that's over 80% of our portfolio company CEOs in fund one. A lot of these founders benefit from having a strong lead VC, can write the biggest check, can set the terms, can help institutionalize the company, get them to that next stage. And we didn't anticipate doing that necessarily, but we found that it really helped the company put them in a very different position, and also de-risk our investment as well as investors, downstream investors that did seed in Series A+. So when we went to raise our next one, we said, okay, well, we want to do that and continue to double down on pre-seed. You don't always need a lead at pre-seed, but it does help. And it does help when somebody comes in, can do the lead due diligence. And I get on a lot of calls with other angels or other pre-seed investors that are like, hey, we're going to write a quick small check, or we're not going to lead, but you're going to join the board. You've done all the diligence. Can you share your diligence? Can you help us think through this a little bit? And so I found that it helps the companies, and really, it's what I enjoy the most. Like it's, everyone says they're contrarian and whatever else, but like I find these founders. We might have talked about it in the last podcast, but they're in Lincoln, Nebraska, that come from a Latino immigrant family with zero Ivy League education and have built something, but don't have a network, don't have the Ivy League school, and they don't even speak the VC lingo, right? And so, how can we find these founders, get them in a good position to grow a venture-backed business, which is very different than non-venture-backed businesses. And so, for me, it was just really, it's what I love to do, what I'm the most passionate about, and I find it very differentiating, especially being here in the Midwest. There's been a lot of movement and a lot of incentives for smaller funds and grants and all the that could write 50, 100K checks, but it really does make a difference when you raise larger rounds, if that's what you need to do. Now, as you know, there's a lot in the last few years that people have raised large rounds at high valuations, and because they could. But I think that has changed. But in general, I would say that founders, especially founders, minority and women founders, haven't, raised a ton and spent like crazy. And having a larger round many times puts them in a good position to grow and scale their business and buys them time, more importantly, to do that. And so that's what we wanted to do for Fund 2. And then also really grow out our team so that we can help our portfolio companies with anything that they needed, but also assess a lot of the new deals that are coming in.
Take me through that piece of it, the team building side of it for Chingona, because going from a $6 million fund, management fees on that versus $52 million is obviously a much bigger difference. And like when we had chatted last time, you had a plethora of Kellogg interns, I believe, who were helping you along the way. And I remember seeing a picture of you meeting them in real life, which is amazing. Now that you have a bit more capital, I saw that you were hiring, or I don't know if you still are, platform operations analyst, I believe his name was. How are you thinking about building your team now that you have a bit more capital, and where you want to go, how you want to build this with Chingona Ventures?
Yeah, look, Fund 1, it was just me. I barely paid myself anything, and I did have a bunch of interns, which I'm very grateful for, and I still do. I love Kellogg interns, MBA interns. That they're the best. We actually had a booth intern as well, but I went through the program and I saw how that benefited my career, and I went through it 9 years ago now, and so I want to do that. And the goal out of the program is after 10 weeks to say, hey, do you want to be in VC or do you hate VC? And that's both of those are good for me. Actually, right before this, I spoke to a former Kellogg intern of mine that worked with me 4 or 5 years ago, and I've been a reference call for him. And so it's really great, and we have a wide diversity of backgrounds that join us, and so the perspectives that we have are great. So we hired at the time, senior analyst in December. She was just promoted to associate. She's done fantastic. So
nice.
Very, very excited.
Nice.
Her name's Rocio, so you guys should follow her on Twitter if you hear this. But she's incredible. And the way I think about it is, I like to make sure that person is onboarded, make sure they're in a good position before them bringing on somebody else, right? And so, and look, even with a $50 million fund, I don't think we need a huge team, right? It's not like we're having millions and millions in management fees. Right. So every person does something does everything really, right? So for me, that's what I did when I started at my last fund. It helped me understand the business as a whole. So not only doing diligence with founders, sourcing deals, but also how does a fund work? How do I think about cash management? How do you think about portfolio construction? How do you think about helping companies and thinking through exits or partial exits? And so that allowed me to do that on my last fund, and then allowed me to really understand how to build my fund. And so I think that everyone coming in should do that. So we are now, I think, Rocio is up and running, and so now we're hiring a platform and operations person. The challenge with that is we are getting a lot of inbound for people that want to be investors.
Of course.
So as you can imagine, so we're kind of trying to assess it in a different way, because we don't want somebody to just be kind of a separate side of the house and always want to be an investor because our focus is on investing. But we want somebody that it comes in early and does some of the marketing operations, which Rocio and I are doing ourselves, and really help build that out while they're learning from the investing side. So we're thinking through that a little bit more. But anybody that's listening, if you have 0 to 3 years out of undergrad, have a great attitude, can do some Excel, likes to write, can do some marketing, come in, and hopefully you're in Chicago. We'd love to talk to you.
Okay, I wanted to dive a little bit deeper on that because I remember being at the VC Platform Summit, Global Summit in New York City, and I was talking to all these different platform people there, and everyone's role was different. It seemed like every single person's role was different. Some people were like super high on the talent side, like only talent acquisition. Some people are on the marketing. Some people are supporting portfolio companies, and like there's so many different ways you can go about having a platform in VC, and obviously the fund size would dictate a lot of that in terms of how big you have it. If you have like a Jason Horowitz strategy, much different from many other funds. For you, you mentioned a little bit already about this position. I want to just dive a little bit deeper on that. What are the things you really care about the most from a platform person at a $52 million fund? I'm just curious about that.
You bring up an excellent point, and it was really hard to write the job description. And I actually talked to a lot of other GPs about this. You're absolutely right. The platform role is different everywhere. And it's interesting. So I joined Kauffman since we last spoke, and we had this conversation with someone that raised I believe it was $450 million fund, and part of their core, or basically the whole core strategy is the services piece. And he said, to really do this right, you really have to invest a lot of your management fee into this, and not just have this as kind of a side thing. And it made me really think through that, because you're right. Because like if this is something that is a smaller piece of the business and it's not the core focus, then anybody coming in is basically not going to feel right about their role or their career opportunity or anything else. And so it made me really think about it, because what we really need is someone to help us with operations stuff. So we collect a lot of data from our portfolio companies, we report it out, we collect information from our LPs and data things coming in. But we also haven't even spent any time on marketing. I literally have not been intentional about marketing. And it's great that we built a brand so far of literally nothing.
Yeah.
We've never been intentional about it, right? My LP and someone was like, you got to hire someone. You got to really think through it. And it's not like we're the most active on Twitter or anything else, but I've been fortunate to really build up the brand that way. And we need to be intentional about that. So that was one piece of it. The second piece was with our portfolio companies. So we have now 27 in Fund 1, we have 9 in Fund 2, so we have 36 total, and we're investing in probably 31 more companies. So we're going to have a lot of companies, and we make money off of basically investing in our portfolio companies. If they do well, we do well. So there's a lot of needs around hiring, around fundraising, around even sales that I have done just myself. And so we've brought on 2 senior advisors that have helped with that, but can we bring on, and we've been fortunate that our LPs, 20% of them are basically banks that are really interested in our fintech platform and that want to support our companies and that want to make connections. So I've been making those manual connections myself, but can I really build it out on the platform side and say, all right, what do these companies need? What are they asking for? What is the stage? Who's in our network? And how are we intentional about that? Now, is that a whole, full-time role at this stage? No. So that's why we have this platform, we have that operation. So it's a tough role to hire in full transparency. It's not as easy as like an investor, analyst role or associate role, or principal. But it's something that I want to be very intentional about, because I do realize that going into VC, everyone knows, GP partners at firms are not great at mentoring and managing and all that. It's like not a secret, right, in the space. And so I do want to be very intentional about every single person we hire, what their role is here. Do they feel motivated? Is there an opportunity for growth based on both what they're looking for as well as our needs? And those have to align. And so that's why we're kind of thinking through this a little bit of like, hey, we absolutely need platform and operation support first and foremost. That's where it's getting strained right now. But can we then develop this next investor if that's what they choose to do?
Oh, that's so fascinating to hear how you're thinking through it. I think about even Vic on our team was leading the platform side of things and how he helps facilitate connections and tracking that with our portfolio. And then I'm thinking about, okay, like on my end too, just thinking, okay, we have these different assets of like a newsletter, a podcast, Twitter followings, whatever. How do we leverage those to help the companies we're obviously having a portfolio, but also then portray that to everyone else. So we can obviously have every founder in our fits our thesis come to us and know who we are. That's like the goal. If you miss out, you're always thinking about that. It's impossible, right? But you're thinking about that constantly.
Exactly. And how do founders find us? Like, again, I think we've just not been intentional about it. But one thing that is really important to me that I've thought a lot about is this authentic piece of it. If you're naturally good at Twitter, for instance, like Gail became, this incredible influencer on Twitter over the pandemic. She's crushing it. And we've talked a lot about that, right? Like, and I've talked to another GP investor that today that has zero Twitter presence, and has a bunch of unicorns as well, right? And so there's not a right path necessarily, but what's authentic to you. And so for me, sometimes getting on Twitter too much is like, I need a mental health break, right? Sometimes with like
yes.
the things going on, people fighting and all the things.
True.
But I do know it's important too, because that's how we found one of our best performing companies. That's how we find LPs. And so finding that balance. And one last thing I'm going to say about that is that Jimena here, one of my friends in Chicago, she was a part of the Biden campaign. She was part of Lori Lightfoot's campaign and building the digital infrastructure. So she's a good friend. She's offered to kind of build that out. So more to come on that. But I at the end of the day, I'm trying to be very intentional and very authentic about our brand as well as our team building.
Yeah, and on that note too, I think about with any emerging manager, and then especially whether women, Black, Latino, like to have your voices elevated, it does matter though, and it's different than like a white male GP, for instance, not being on Twitter and then find a deal for whatever. Because for the other people who are entrepreneurs and founders out there, to find people like them that will invest in them, like if they're not visible, they're never even going to see that. They don't see that it's possible. Our aspiring VCs don't see that's possible. So at least for me personally, I've always thought of it that way. When like we're on Twitter, we're promoting Gail stuff on Twitter, I'm doing more on Twitter. It's that we could do like minimal, obviously, but the more we can do, it also helps inspire those other people potentially to, even ask, what is VC? What is angel investing? Wait, I could start a startup. I have this idea. I know this thing. This is a problem I have. And that for me, seeing the visibility of that is how I think it's been helpful, at least as a firm, in terms of then impacting and having real conversations with people. And you mentioned one of your best performing companies came to Twitter, and I wanted to talk about them. And I believe it's Career Karma, if I'm correct. So I did a lot of research going back into the archive here. So tell me how you met Ruben and Career Karma.
Yeah, so on Twitter, he reached out to me cold on Twitter. So he was part of YC. Yep. He was in San Francisco, right? And this was pre the racial equity movement and all that. And it wasn't like it was easy for him, right, to raise. Yep. Even with the network, even going through one of the top accelerators. And he just reached out cold on Twitter. And that's why as much as sometimes I want to get off or not be on or beyond, like I know that this is how founders find us. And so he reached out cold, and then I got a reintroduction from Carolina, who used to be at K4, now she's a partner at First Close, who's also not in the fund. But they had invested, and with Ruben, it's interesting, he's got this amazing background where he, and it's all like his network, and he was a former investment banker. He's a cello. He plays the cello. He's amazing at it. Yeah. And one of the things that I really liked, he was basically my first or second investment in Fund One, is his ability to do something with very little and find early validation that people want the product. So one thing that we're super early with pre-seed investors, and so sometimes they have a product, sometimes they have traction, but usually not. Yeah. And so we look for other forms of traction. And for him, he basically built a podcast and a community of people that were looking to get into tech. And he was able to personally do it himself. And so he started helping people just get into boot camps. And what he realized was that 70% of all applicants to boot camps get rejected. And this is bad business for boot camps as well, because they have to do a lot of marketing, and if they get better lead gen, then they're obviously willing to pay for it. And then for on the other side, for consumers, they want to increase their pay, and they are looking for these boot camps, but they may not know how to apply or how to prepare or all that. And so he did this fast track program early on. So for 30 days, told people exactly what to do, created a community of support. And then for every qualified lead that he brought to the boot camps, they would pay him a percentage of the tuition. And so that's how we started when we first invested. Now, some people said, well, maybe, it wasn't scalable, a big venture opportunity, it was a tech behind it, all that. But he showed very early on that he did something better than anybody else, and that both sides of the market were willing to pay for it, and they were desperate for it. And then just, on top of that, a lot of the people that used his platform were women and women of color, really single moms, a lot of them, because they wanted to increase their pay to help support for their family. And so, and I went to this, their office, which was in San Francisco. They had like a 1-bedroom or 2-bedroom, whatever, office apartment.
I've been there, by the way.
Oh, you've been there? Yeah. So you know exactly what it is. It's just an apartment. And he would be like, we'd get on a call and be like, all right, I got to get on this training or whatever. And so he got on, and then you would see people just so excited he would just pump everybody out, create community, they would support each other. You would see them support each other on Twitter. And so there wasn't a lot there when I invested in terms of, revenue or product builder or whatever. But I saw firsthand that he was able to show that people wanted to use his product, that it was being successful, even if it was a manual transaction, and then people were willing to pay for this. And he was always super scrappy with his funding, even when COVID hit and boot camps delayed the people coming in to get trained with boot camps, that delayed the revenue.
Yeah.
And he was always able to cut down a little bit on the marketing, continue to grow. And then when he started getting paid again, he was able to turn it on again. He got the profitability during COVID. But then he was able to raise the Series A and Series B. And even the Series B, he wrote his own investment memo, which I've never seen done before, for investors, right, that had like questions on the market, questions on the product, questions on the team. That's probably goes into his investment banking background. But he is a lot of people know him, but he's one of the most humble people, well-connected, really smart, really, just a good human being out of this world, just extraordinary human being. So I was very fortunate to back Ruben first and foremost, and the founders on his team, but also what they were building. And he's been a great investment. And he reached out to me and told us.
That is an insane story. I have known about them for a very long time when they first had the podcast, Breaking Into Startups. And then I'd interviewed his co-founder. And then I happened to be in SF right when they were doing YC. So I remember going to that apartment you mentioned and seeing the whiteboard they had about like their metrics and stuff. I'm like, so you guys are going through it right now? Like, yeah, it's crazy. And I was just like, this is wild. And then after that, have interviewed Ruben twice then, and I've seen their progression just every single time. And going back to one of the things you mentioned, Ruben was saying he had built up this network and he thought like, oh yeah, I got all these people riding with me already. Like this fundraising thing is going to be easy. And a lot of them didn't invest, or they didn't invest right away. And he was just like floored by that. Just like, wait, what? Like, I thought we were already like, we knew this was like locked down. And that just shows just how hard it can be to raise. Even when you think you have people in your corner, you still have to hustle and make it happen, which I will always praise Ruben for making it happen and the work he's put in to do that. And he just evangelizes everything they're doing, which I think is exciting and just a model for people to follow. Any founders, check out Ruben Harris. He's incredible, by the way.
100%. I mean, I would bet him, obviously I did back him any day.
Yeah.
I'm so bullish on what he's doing and ultimately, the next stage of this business that he's growing.
Yeah. And one thing that I realized I kind of glossed over, we mentioned the fund and raising 52 million, but we didn't really mention that process and how that was for you, any differences or anything like that. And for any other emerging managers, I think it's a disservice to not ask about it. So how was Fund 2 raising that compared to Fund 1? We have to dive a little bit deeper into that because I realize we can't gloss over it.
Yeah. No, I appreciate you asking that. And like Fund 1 was a total of 18 months. It was a sole LP. It was an institutional, which was unique for the time. And I raised it. I started thinking about it really in 2017. 2018 is when I really started it. And this was before a lot of recent movements. I mean, now I think everyone's raising a fund, but especially in Chicago, right? There wasn't that. And look, I had over a decade of Goldman Sachs experience. I had been a part of 2 funds. I had some sort of investing track record, and it's hard. it's really hard. And I was very fortunate that like I went out to just start an angel group because I felt like there's no way I'm gonna be able to raise a fund. I don't have a high net worth. I don't have all the things. And I had seen the people that do raise sole GP funds or like have family money.
Yep.
So they use that and then they make investments and then they raise. I don't have family money. And so I was fortunate. I went to my now Anchor LP and I said, hey, I'm looking to invest in this, create this angel group. I have all this deal flow. I have provided advice over the years to these founders, but they're not getting back. They don't need any more advice. They need capital. And so he goes, well, I'm actually looking to invest in something like this, right? Because they're institutional. They had invested in kind of traditional institutional types of investment. And it took a while because it was new. And so it was not only just me, but it was somebody else, a big, interesting enough, a white man in the middle part of Illinois, which was differentiating, right? Because he was focused on different types of businesses. So it's not just about race and gender, but it's really about location and thesis. And so I was fortunate to have him back me in Fund 1, and I was able to pivot out between 7 investments. So Karma is one of them, but we have many others as well. And then for Fund 2, I wasn't actually starting to raise. It was the summer of 2020. There was a lot going on with a lot of the racial equity movements and the unfortunate incident with George Floyd, and people were just like questioning the infrastructure of a lot of different industries, but particularly venture capital. And so PayPal had announced this big initiative with investing in Black and Brown communities. And so I had connected with Mario Ruiz, who was formerly there, and it was a seamless process, right? It was something where why I say that is because there are a lot of movements and there's a lot of funded funds, but for Black and Brown managers, but it's not always easy to get a hold of them. It's kind of all over the place, and I've personally experienced it as well. And so I'm very fortunate. It was a process where they were very transparent from the beginning. There was an online form where anybody can apply. You didn't need to know anybody on your team. And they were my first check. They were my first commitment in Fund 2. And that's what kickstarted the race. So then my Anchor LP for Fund 1 came in and increased their check. And then that led to another LP and another LP. So I was able to, again, this was years in the making. And pre-COVID, I had built these relationships over time, but that allowed me to really get a good, strong anchor investor base that was pretty much all institutional. It was actually all institutional. Sorry, there was maybe 2 individuals, but really all institutional for my 8% of my fund target. And then it was a lot of the whole meeting investors and attending events, and it was all through Zoom, which was hard in itself. But everyone kind of sees the end result, and everyone's like, "Oh, you're so great, you raise," and I don't know if they assume it's easier, and some people in the GPs that I've talked to like highlight, "Oh, we raise so fast, we raise this much." It's never easy for fundraising. I would say for people of color in particular, for women of color in particular, it is never easy, and you see a lot of these fund managers who have track records, who have raised funds before, and it's very hard to raise, right? And so it was definitely challenging. I think it took a toll on me more personally versus professionally, right? Like there's always something that takes a toll. So professionally, I was just like spending all my days fundraising and still deploying out of Fund 1 and trying to manage and trying to hire. So health-wise, I probably wasn't, and trying to take care of a 3-year-old.
Just gonna say, yep,
right?
3-year-old as well.
So right. So that, I guess it was 18 months before COVID started, but like it was freaking crazy. And I remember one LP in particular, my son was screaming because he was supposed to be taking a nap. He was screaming, and I was pitching the LP, and I'm just like, okay, do I just let him cry and continue this? Do I pick him up and bring him into this meeting? Like, what are they going to like? So I just picked him up and brought him to the meeting, and then they ended up investing. So I was very fortunate that I had patient LPs, right? But yeah, we were able to thankfully close. And look, I get a lot of questions around like, how did you raise and all that. I still think like, obviously there's so much to prove. Raising is raising, just like with startups, you actually need to prove it, and that's returns and that's all that. But I will say that it was I try to focus on what I can control. And what is that? That's I can control how prepared I was. I can control what was in my data room. I can control how I followed up, how quickly I followed up, and I couldn't always control whether I fit a box, whether they wanted to invest in me, whether they had money to invest in
Yeah.
me, even. And so there was a lot of learnings. There was a lot of learnings of qualifying LPs. There was a lot of learnings of like, hey, you know what? If you're not interested in a sole GP, this is not going to be a fit. Like we can't promise that I'm going to bring on a partner. And I had a lot of great people help me with that conversation. And then there were some that just wanted me to invest in women and minorities, and they had those were not a fit necessarily, but then there was ones that just loved it. They loved that we were in the Midwest. They loved that I was still GP. They loved that we were investing in all different types of founders. It just so happened that we had great diversity in our portfolio, and those were those are the people I focused on and I'm very grateful for. And so there's still a lot to prove, but one thing you touched on before on representation, which I think was a great point, that especially minorities. There's not a lot of us, and I was just like heads down focused on raising. I was just heads down focusing on investing, and I still many times am. But the Henri from Harlem and Jarrett were like, I think you're the largest Soldier P Latina fund that raised, because they collect data on everything. And I was like, oh. And it was that's pretty insane, like to and I just kind of like I'm someone that doesn't celebrate. I just kind of like go like literally I closed the fund. The announcement was on Saturday, and Monday I was taking fund 3 LP meetings. And I'm very grateful for the support we found in the community. I'm very grateful for the announcement and all the people that came together and now executing on it. But I think it is important to recognize that and to recognize that celebration, but also hopefully the opening doors for more, especially women of color that are raising their own funds, that have had a lot of, a tough time raising. And I'm in conversations with many of them. We're trying to help each other out over text messages. We're trying to invest in each other's funds. And it's hard because, a lot of people reach out to you, like, I want to get into VC, I want to start my own fund. And you have that plus you're trying to manage everything else. So I am still trying to manage that piece of it, of wanting to help the next generation kind of come through while still learning myself and trying to figure it out myself. And I've had some great people that have helped me, build this out. And I have to say, which I think a lot of people might say, but Charles Hudson from Precursor was an incredible mentor. And yeah, I mean, like he's the original Soul GP who broke a lot of doors for a lot of people. And so many others in the industry that I've looked up to, Miriam from Ulu, and so I think we all, you're right, representation as much as we can while we're building our firms, but also making sure we manage our personal time. And so one of the things that I've done recently, I never pause, and I'm forcing myself to really spend a few hours or a vacation, or actually just and by the way, my body just does that naturally. Like I just can't look at the screen right now. Just take some time to just really focus on a lot of the important things. So like my son and watching him grow, and I haven't prioritized my health. So I've started prioritizing my health, prioritize making sure people on my team do that as well, by leading that, and then forcing them to take vacation, which I never did, and then really just also with our companies in the portfolio, right? I think that's been a priority of mine as well.
Yeah, I just had this conversation actually with Gail at Vitalize around. I think she mentioned, or she said, had in the calendar she's going to be out for a week coming up soon. And I was like, yeah, I saw you're going to be out for a week. I just want to say I'm glad to see it because you deserve a vacation. And just like, yeah, I definitely would like it some time off, which would be great. I also can tell going back on like your Twitter, if you go back a few months, I can tell you're deep into fundraising because your cadence of tweets is totally different. And noticed it right away. And I was like, that time had to be when she was fundraising, because it was just like maybe retweet once in a while some Chingona Ventures tweets. And I was like, I can tell. I've seen enough of them to see that. You just get so busy that you can't really think of anything else. So just a reality of what happens. And two things I want to get to. One being Kauffman Fellows, which you mentioned. How was that experience? Why did you decide to do that? Because I know people have heard about it. Some people have applied or curious about it. Take me through that for you.
Yeah. Yeah. And I'm glad you noticed that piece of it on Twitter because I basically said no to everything. If it
I
wasn't
noticed.
an opportunity, like I was like, no.
You have to.
And you have to have that. Yeah. And I felt bad for a lot of it, but at the same time, like if I don't raise, I can't do all this other stuff. So I'm glad you noticed that. But Kauffman Fellows, so one of my investors, Jason Green, who's the founder of Emergence Capital, he was on the board of Kauffman. He actually was the one that reintroduced it to me. So I had known about Kauffman. I had thought about doing it a few years ago, and I talked to Jeff, the CEO. And I wasn't sure if it was the right place for at this stage of my career. So I was actually, joined last year, so I was in the height of fundraising, and I was like, "Is there enough kind of GPs raising funds?" I hadn't, and then also I was curious about the diversity of it, like right, all the things, and it's an expensive program, so. There's been a lot of conversations on Twitter, I know, about the program and all that. But all in all, what I will say is that I'm very, very fortunate for going through it. And it's not necessarily like, what is VC that you learn or anything. It's more about, and you definitely get great conversations with Mike Maples, for instance, 2 weeks ago on portfolio construction, how he thinks about investments and all these different, industry leaders that have been around for a long time, kind of highlighting that. So I'm very fortunate. But the thing, our class is so tight and my forum is so close and we talk to each other all the time. And we've all experienced life changes, professional and personal, and very, very deep conversations that we have. And I'm so grateful to have that, especially going through COVID and through this environment and through fundraising. And we're able to help each other and we and each other. We're all at different points, right, in our either fundraising cycles and our professional career. But I'm very fortunate that I've been able to get closer with Sean Mundy at Concrete Rose and Nasir at Zeal Capital. We grew way even closer, and Matt from Rare Breed, Sydney from Precursor, Ernest Webb from Great Point, and so so many other people that I've met for the first time. So I'm grateful.
And one note on that, Sydney soon to have her own fund, by the way, as you mentioned,
Yes.
as we saw recently on
Yes.
Twitter, she announced, which is very exciting as well.
You gotta have her on too.
Oh, definitely, I would love to. One of the last things I'm curious about, because I know on the first time we had a podcast, mentioned the craziness of your schedule. You just mentioned it here as well. Is there any question that you get that we haven't discussed yet that we could just ask you now, and then you can just shout it out when people ask you this question, like, hey, just listen to the Vitalize podcast. I wonder if there's anything else we haven't discussed. Maybe we have, but anything else you get questions on frequently that we can answer here to save you time for later?
No, well, one, I love that and appreciate that because sometimes I just say like, hey, this is the podcast we want to hear the story in the background. No, I think more recently I've gotten a lot of the questions around how do you feel being a leader? How did you decide to become a leader? Or I don't know why I've been getting a lot of that question. And it's interesting because I don't think about it or I don't think of myself as a leader. I'm just
You're doing things. Yeah.
And in doing things, I think, I think earlier in my career, I looked at people as leaders. I looked at people, I put them on a different, not pedestal, but like kind of certain place, right? And then for me, the way I think about it's not necessarily being a leader, it's just doing. I didn't like, well, how did you know how to start your own fund? How did you? And it's just like I just did. I just didn't see anything in the market, so I just didn't have any other choice. I didn't know how I was going to do it. There was certainly no market tailwinds at the time to allow for this. I just did it enough and told enough people and just spent my every free moment I had outside of my corporate work doing this. And it was first and foremost because I wanted to and I enjoyed it. Because if you're trying to be an investor or a VC and you don't actually enjoy it, right? If you're not every day on the weekends, at night, every free time, like learning about, I'm obsessed with it. Like even my husband says, like every party we go to, like you're constantly asking me like what they're doing, like they're shut up and you feel like they're pitching you, and it's like no, I just love what I do. I truly do, and I'm very fortunate that I'm able to do this and be in a position where I can work with founders every single day and learn about the new technologies and be in a position to raise capital to be able to then invest in founders. And so, all that together is just like being a leader. I don't think of myself as a leader. It's not that you go and be like a leader or CEO or whatever. It's just like doing what you're super passionate about and against all odds, even if you don't see anybody in that position, just going after it. And I think, maybe it's the universe coming together and giving you that opportunity.
To that point, as we wrap up, I always think about this and seeing what you've done, seeing, like you mentioned, Mac Conwell, seeing what Gail's done, everything too. I always just think of it in my head, and I see the passion and everything with what you all want to accomplish. And it's just a matter of like, what's the alternative? Like, you wanted to do, so you just do it. You know what I mean? I think sometimes people wonder like, oh, like how do I convince myself? But like, no, it's like, if you want it, you just do it, because what's the alternative? Not doing it? Like Mac taking 1,000+ meetings. It's like, well, he wanted to raise a fund. What's the alternative? Not raising a fund. So he's not going to do that. So he's going to keep taking meetings. It's like, it becomes so simple when you realize that you're just so focused on this thing, because that's what you want to do. And I love the passion that all of you have for that. And it's exciting to be part of it.
And look, and especially in minority communities, I will highlight this, that
Yeah.
Coming from especially the immigrant communities that I did, they came from, it's like the risk is very different. Like there's no cushion. You have to pay for it. You have to, right? Yeah. And so I think that is, but I talk to a lot of women of color and community of color, where it's like, you have to assess the risk in a very different way. The perceived risk, right, is one thing. Yeah. But when you actually think about it, it's like I gave myself a timeline of X amount of time, 2 years. Talked about it with my husband, like we're going to be making $70K together, or less than that. I don't even know. And can I try this? And what's worse can happen? I fail, and whatever fail it means. But then, can I get a job if I want? Yes, I can get a job. But is it a job I want? No, not necessarily. So I think about it from that perspective.
Yeah, no, I love that. That's amazing. What's the best place for people to reach out to you, connect with Chingona Ventures as well?
Yeah, so any founder that wants to tell us about our business, the best thing to do, go on our website, Chingona Ventures, Chingona.ventures, and there's a submit page. Submit your business there. You can click on our process. It literally highlights our entire process on there. Every question we're going to ask you, all the deals we're interested in. You can send me an email, but I'll just direct you there. It helps us streamline all the 100 deals we get per day.
Yeah.
And then send me a DM on Twitter if there's something specific, or just tag me on something. Again, I'm not as involved on Twitter as maybe Gail or you, but I do try to check that, and I always appreciate the messages.
Awesome. Thank you so much, Samara, for the time today. Really appreciate it.
Thank you.